Welcome back to FT Markets. What does the Scottish no vote mean for investors and financial markets? We've seen some positive reaction in sterling and share markets, but what's the global significance? With me to discuss this is Ewan Cameron-Watt, who's the Chief Investment Strategist at BlackRock Investment Institute. Welcome, Ewan. Are you expecting a huge relief rally in markets?
I don't think so, Ralph, particularly. They haven't sold off very much. The only thing that had risen a lot was the volatility of sterling against the dollar.
We have our chart of sterling here, and actually what you do see is that
indeed,
from the over the summer we saw quite a sharp selling off.
And then indeed, as you can see, in the first couple of weeks in September, when the polls appeared to be moving towards a very close fight, and now the recovery in the last few days. I think the currency's been the main place, although individual share prices also of Scots-orientated businesses have fluctuated a bit.
I presume if we had a yes vote, we would have seen...
I think if we'd seen a yes vote, then we would have seen a further sell-off in sterling and a very substantial spike in the volatility of sterling against the dollar and the euro.
Just how important has Scotland been to, well, let's stick with the UK for the moment, to UK shares and gilts? I mean, we have our second chart showing the FTSE 250 share index, and you can't really see any pattern there. You can't really say there's been a Scotland effect.
I think if you dig below the surface, you would see that shares of, and indeed bonds, of Scottish-orientated businesses suffered a bit in the last couple of weeks. Scottish and Southern Energy, for example, saw its debt spreads widen more than other similar rated credits. There was a little bit of a sell down in some of the mid-cap names exposed to Scotland. And then in the last couple of days, as the outcome became clearer, they've rallied, and indeed a little bit more of a rally today.
Okay, and the gilt market? I mean, I suppose the question for global investors is, does the UK look different today than it did before this campaign?
Well, I think it does a little bit, but it does in a way that it's about the rates expectations. So I think that if we'd had a yes, interest rates, I think if we'd had a yes vote, then the first rate rise in the cycle would have been postponed, probably into the middle or end of next year. With this vote, business confidence remains pretty strong, job creation is going to remain pretty strong, and I suspect that the expectations of a February rise are probably right, but there may even be some people thinking about the first rate rise coming as early as November.
But what we're going to see now, of course, is a debate about devolution in Scotland and the other parts of the United Kingdom. Is that going to be a market theme?
I think it will be, and I think it plays in two ways. First of all, in the longer term, if you're going to have 3-4 assemblies all with taxation raising devolved to them and spending, it makes getting national fiscal discipline into place a great deal harder. And remember, we're still running a substantial deficit. And I think in the second place, it's just going to make people think a little bit also about the possible 2017 in-out referendum for the EU. Will that take place, or will all constitutional change in the next Parliament cycle push that out to the right?
That was maybe the bigger worry at the back of markets' minds in the past few weeks, whether Scottish exit would lead to a UK exit from the EU.
Yes, and I think that's still on the agenda, as it were, for the parties to fight over in May 2015. But maybe, we've seen Spanish equities rallying, Spanish bonds rallying. Maybe the kind of secessionist element moves a little bit out now.
Yeah, I suppose that's a good point. I mean, is there other broader implications, do you think, for how the rest of the world will look at Europe and the rise of nationalist, Eurosceptic tendencies?
Well, I think the rest of the world, in looking at Europe, if it felt that the UK is one of the largest members and perhaps most reform-orientated members of the European Union was going to quit, then it would definitely have a very downbeat view. I think in the shorter to medium term, pushing the Scottish referendum into the no territory, whilst we're going to see a lot of noise around, say, the Catalan unofficial referendum in November, probably overseas non-European investors are not worrying so much about instability and secessionism in Europe now.
Okay, last question, Ewan. What's going to be driving sterling, gilts, UK equities in the weeks and months ahead then?
Policy. Monetary policy will continue to be the most important factor for sterling, and therefore, obviously, for equities, because of the large cap sector being so exposed to overseas earnings.
Ewan, thank you very much. So focus then back on the Bank of England, what it does with interest rates, but we should watch out for those longer term fiscal implications for the UK and for broader European themes.